Hello traders, Nick Shaheen here looking at Netflix. I recently did a video on it on the 20th, and I believe that's the day this happened, right there. It was at 336, 37, and I did the video to answer the question, is it a good time to get into Netflix? And here was my answer. Let me see if I can do it real quick here, if the technology doesn't fail me. But before I do that, down below I'm going to put a link to access to a class. I can't do these a lot because they take a lot of my time, and I spend one-on-one time to make sure that to get my technical reading of the charts across to whoever's trying to learn it. So what we can, there's a lot of information we can learn from the charts. Now, take fundamentals out of the picture. I know it's a debatable thing. People either completely believe in it or completely hate it, the fact that the technicals do give us information. So this chart is full of information. I'm going to share it with you today. But first, I'm going to tell you my decision whether to buy it or not at that day. All right, so we'll switch over to here. Higher highs, which is good. And do I buy it right here or what? It's kind of like it depends, but for me, I would wait out. Just today is quad witching day, I believe. It's
so wait out.
The 20th of December. The open was wild. I don't know how the close is going to be. It's still trading, so we'll see. The only reason I wouldn't jump in with both feet right here because of this. Okay, so this is exactly the point I'm going to make again today. All right, so this is a problem, right? But it's also the opportunity. So it's not necessarily I'm bearish Netflix on that day. I just thought that it wasn't an obvious entry point for somebody who's starting out. I acknowledge the rally. I acknowledge the fact that if I was long, I'd be booking it here, or at least locking in the profit. How do I do that? If I bought calls, I'd sell calls against them to have a spread that's credit, which means that I'm long a debit spread for free. Actually, I got paid to be long it. If I'm in the stock, I'll sell calls against them. That would have been a great way to make some money. So this is a very tempting gap, but it happened on fundamentals because they told us on the earnings that back then that things were bad the way versus the expectations. Now, don't hate me for saying this. This is what the market thought. Now, I didn't do this. And they got back here to the gap and they failed to the level, I should say. Very tempting to say, oh, this time they're going through, and then they failed. So the point is, anybody can learn this stuff. It's not rocket science. I am not a Wall Street guy. I'm an engineer who just learned this on his own. And I can explain it in plain, simple English because I had to learn it in plain, simple English. So on this chart, there's plenty of information. How do I trade Netflix from now? So there we go. Now the question, how do I trade Netflix from now? First of all, I want to say that this is probably the most important chart for the NASDAQ for the next 2 weeks. What? Yes, in my opinion. That's my opinion. Nothing here is a trade alert. Nothing here is a recommendation to buy or sell stocks. Netflix is the first of the mega caps to report. Technology mega caps. I'm getting over a cold, so hang with me. So, which means if Netflix rallies or fails, it's going to affect the Fang Gang, Apple, Microsoft, Disney maybe, up or down, I'm not sure. All these guys are going to be, they're going to move in sympathy to the reaction of Netflix. Now, what's the reaction to Netflix going to be? Flip your coin and you will be just as smart as the biggest expert on the street on Netflix. We have no idea what they're going to report. Moreover, if they give you the P&L ahead of time and the balance sheet, you couldn't guess which way the market is going to take it the next day. I've seen stocks get obliterated on excellent reports, and I've seen stocks rally on crappy reports. GE comes to mind, and Caterpillar comes to mind. Caterpillar fell 25% on a beat and raise. GE rallied 6 or 7% on an absolute mess for a report. Who else did it? The Canadian coat company fell 25% when the company exceeded expectations and doubled or raised their forecast, and then the market sold it off. Anyway, point is, it's a binary event. We couldn't guess which way they're going to move. In this case, I watched the levels. That's all I got. So I know that this was a breakout zone. I know it has more legs in it. Ideally, it should be about this much, right? Which would bring it to this ledge right here. Nice and neat. But there's this ledge in the way, this failure, and this failure. But these are actual opportunities. What does that mean? If we drift here and we get back up to it, sorry, I had a coughing jag. I had to stop the recording. So if we get back to it, it becomes the neckline that could fuel the next rally. And it will be big. The rally will be huge. What does that mean? So you've heard of cup and handle. It's a fancy term for saying the bulls overcame a big neckline that has been a failure for a while. How do I picture that? Here's one. They just failed. Here's one. They just failed. And here's one. They just failed. All right. So failure, failure, and failure. So it's definitely a resistance. If the bulls can go above it and come back to it and use it as support, then it will serve as, okay, the bears are tired of defending this neckline. The bulls are still fresh and they're ready to go. So their legs are fresher. They're going to overshoot higher. Now the technicians tell me that it should be as deep as the bowl of this cup and handle. If it forms, which means I don't start buying until the trigger happens. That's why I have that orange line, an alert. So for me, some people like to chase the trend line, and I'll show you the difference. For me, levels speak louder, for me personally. So this is the bowl, and it's not quite accurate. It should be all the way down here. But to me, it doesn't really matter because I'm going to set a trade that will, technically it should be up to here. But boy, this is too big a wall to just slide through like butter. On earnings, maybe, earnings, boom, burst, but they will come back. They have to fill the profile, the volume profile. What is that? So this is the volume profile. What are these? These are the volume bars that are down here. Here they're expressed in time. Here they're expressed in dollars, where they happened. So it has to be neat. Machines trade, machines like neat stuff. Okay, so what's the difference between trend line and neckline? All right, excuse me. Sorry, this one snuck up on me. So trend line, this is a high, a lower high, and a lower high. So some people like to chase the breakout of the lower high trend. So if they see a close above this trend line, they say, we're going to the moon. Depends how long the neckline has been going on. But if you look at it, there's another one down here. So who's to say that this won't happen? And then it'll be down here. To me, I would look at levels. So I expect this to be some support because it was the neckline from before, and it is protected by support here. I expect this to be resistance. So I'd rather wait for the level breakout, not, okay, let's change colors, for the level breakout, not the trend line breakout. In this case, they're one and the same. All right, so this is plain and simple. So if I was trading Netflix without earnings, my decision would be to put an alert here and maybe put an alert lower. But I think dips will be bought for the market. I don't know about Netflix and what kind of stinker it gives. Gut tells me they're going to disappoint. Gut. I know nothing. I know nothing more than you do. So my gut says that the hurdle is on them. But maybe expectations are already built in. So all these maybes, and I go back and forth, I argue both sides to emphasize the point that the short-term reaction for this guy right there on earnings, complete coin flip. Nobody knows which way it's going to go up or down. I looked at the options. The open interest is extremely expensive. So anyone making a bet is literally gambling. If I own the shares, I'll probably sell calls against them to make them work for me. So if it falls, I made some money, at least from that, to offset some of my losses. How do I do that? Message me. I can explain it. So basically create your own dividends and some protection. If I own the shares and I want to protect them, I'll buy puts. You see, I'm not taking a side. I can tell you it's poised for a move. Why is that? It is very tight short term. Whoa. Okay, I forgot I did all of these. Okay, let me zoom in. Sorry about that. Very tight. Good, I don't have to draw them again. And a breach of either sides. It's not rocket science. I mean, it could be here at 324.60 versus 325 and change. But this one is a little more clear, 330.3-ish. Maybe, to be safe, 331. So the breach of either of these sides will have momentum in that direction. So this is a fast mover. And, you know, when it runs really fast. There is a chance that I can't get on board after it breaks out. And I should be totally okay with it. So I'm going to zoom out to see if I have... anybody can look at this and see their own scenario. You know, oh yes, it's basing to rally if I love it. Oh my gosh, it's on its way down, ABC down to 200. You can argue either side. Just, I would rather take it one level at a time. So zoom in, and these are the two closest decisions. I see another one here at this level. Okay, so this would be one that would probably bring it back to here in theory, because that's the breakout zone. So now that I'm looking at it, 316 is pretty important. So, you know, it's important to hold. There's a gap down here. Not every big gap gets filled. This right here at 303, 304 is the point of control. What does that mean? I'm going to draw this down to here and leave it here for now. So volume profile, point of control, that's where buyers and sellers were the busiest. So it should be support on the way down. They are above the value area. So this is where the current price is above where it's been trading for this period of time from November on, based on this volume profile. So logic says if they fall towards it, they should find support. So here I am at $316 from two different reasons. So I'm going to mark it. I just convinced myself. I already did kind of with this red line here, but I'm going to mark it to remind myself of this conversation right here. So this one right here should be important. What did we say? 316. All right. So now I remember that it is something that I did on the fly with somebody watching. Okay. Not saying that it's going there. I'm saying that this should provide some support under normal price action. So if we bleed down, this is probably where we should find support. On earnings, they'll slice through support like you won't believe. It doesn't matter. So people ask me, do I do an iron condor? How far do I go out? I don't do iron condors on earnings because it's a complete crapshoot. Okay. So anyway, this was the video. Down below there's a link. If you like the logic, it applies to any ticker. I promise you that. Any ticker, even Apple. So if you trade the SPY, you have to learn the charts. There's so much information in this SPY chart right here. Just looking at SPY. If you trade the futures, you better know this stuff already, but if you don't, reach out. We have a chat room that's pretty cool. All right, next signing out.